To the risk events video for the week beginning the 31st of August 2015. Now, obviously, the beginning of the week we have a UK bank holiday, so the European trade is going to be reduced. I'm not really expecting too much volume from that. And in any case, there's not really too much data to go. So, if we just have a quick look at Monday, we can see we did have New Zealand ANZ business confidence, which was printed another low, which is basically, of course, more bad data from New Zealand, more negativity. And there's just one thing I want to mention in this week. We'll come to it probably in more detail next week, but we're expecting the RBNZ to possibly cut their rate at their next meeting, which is on the 10th of September. So in the meantime, we want to be on the lookout for any negative data that could add to that view. But generally, going into the 10th of September, we want to be looking for weakness in the New Zealand dollar. We're expected to fall against the stronger currencies, think the pound, think the US dollar, going into that meeting, because there's a quite high probability as it stands from economists and market participants that they're expecting a very high chance that the RBNZ will cut their rate again. Now, that could change over the next week or two, but at the moment, that's the situation. So we expect the New Zealand dollar to continue weakening over the next few days into the 10th of September. So that's just something you want to keep an eye on, just a general thing that you want to watch out for. Potentially could be a trade opportunity. Now, if we go to Tuesday, the 1st of September, this is when the data kicks off for this week. You can see you've got lots of data coming out this week. There's a few highlights for the week. You've got Chinese manufacturing PMI is expected weaker than previous, expected in contractionary territory. Remember, anything below that key 50 level is contraction, anything 50 or above is expansion. Aussie dollar, we've got building approvals, which is expected to come out slightly better than previous, minus 8.2 last time. Now it's expected to come out plus 3%. But there is a theme on the Aussie dollar, which we'll look at in a moment, which we'll talk about in just a moment. We've also got final manufacturing PMI from China, again, expected to come in slightly better, but still in that contractionary territory. And then, of course, we've got the cash rate and the RBA statement. Now, just staying with the Aussie dollar, because all those data points, Chinese and Australian data points, will affect the Aussie dollar. Obviously, the overall fundamentals or the underlying fundamentals on the Aussie dollar are weak at the moment, so we expect that pair, or the currency, sorry, to keep weakening. Now, we've got some very interesting data from Australia coming out later in the week, which supports that view. So this data here on the 1st of September, if it comes out as expected, could see potentially a modest rally on the Aussie dollar. But what I think we could do is we could use that as an opportunity to sell into that rally on the Aussie dollar in anticipation of the further data to come later in the week. So we'll come back to that in a moment, but that's just what I would look at from that data there as it stands. So we're not really interested in the data in itself, but if it comes out as expected, if we do get a little modest rally, I'm not talking anything major, I'm talking maybe 50 to 100 pip rally on the Aussie dollar, we want to look to possibly use that as an opportunity to start selling the currency into the data to come, and we'll talk about that in a moment. Now, later on the day on Tuesday, we've got manufacturing PMI, which is expected to come out in line with the previous figure at 51.9. Now, this starts a run of events from the UK, which are expected to come out either as they were last time or better. Lots of PMIs coming out, services, construction, manufacturing from the UK. Basically, all expected to show pretty healthy economy in the UK, that the recovery is becoming entrenched. Now, this comes off the back of Carney's comments over the weekend from the Bank of England, who stated that all this stuff with China, all this stuff going on, and the drop in commodity prices doesn't change the Bank of England's picture or the big picture view regards to hiking rates. So the Bank of England is still on for hiking. So all those concerns we've had over the last week about what's going to happen to the central banks, is this going to cause a changing direction for those central banks that are looking to hike? It looks like the answer to the question is no. So, again, we want to be looking for opportunities to buy the pound this week into all this data, with manufacturing PMI being the first set of data. We'll cover the rest of it later on, but that's what I'm looking for on the pound this week, but opportunities to buy into that going through the week, because the data is expected to come out positive pretty much all week. Then we've got Canadian GDP, which is expected to come out better. Of course, the underlying fundamentals on Canadian dollar are weak, so not really looking to trade into that because it's looking like it's going to be a good figure. But if we get a worse than expected reading, anything 0% or below, if it's negative, that'd be brilliant. We want to be looking to sell out of that, sell the Canadian dollar out of that event, but of course only if we get that negative reading. Later in the day, we've got ISM manufacturing PMI from the US. Again, this is expected to come out broadly in line, 52.6 versus the previous 52.7, broadly in line. Not really expecting that to move the markets either way, to be perfectly honest with you, because of course this week is NFP, and that's the big data point that the markets are going to be paying attention to. Then we've got GDT from New Zealand. Now, GDT, if you've been watching milk price futures, or any of that, or if you watched last week's risk events video or a couple of weeks ago, we talked about GDT, and we talked about how the futures market is indicating that now GDT, after a big 6 to 8 month decline, the prices are going to start to stabilize and then get much higher, basically. Now, that was manifested. It came true. Last time we got a 14.8% increase, which is massive compared to what we previously had. We're expecting this trend to continue. So it might not be 14.8%, but we're expecting it to be either we're expecting it to be stable for this month, okay? So we're not expecting to keep smashing it, but as the year comes to an end and we go into 2016, we are expecting those figures to get much higher, and we're expecting GDP to go up, which of course will help inflation in New Zealand. However, that's kind of a long-term picture, and that thing takes quite a while to play out. So what we want to look for is if GDP is positive, and if we get a rally on New Zealand dollar, similar to the Australian dollar, we want to use that as an opportunity to sell into those rallies. You want to look to sell anywhere in between 64 and 65 cents against the US dollar, 64.50 or 65 looking pretty decent levels. Again, GDP could provide us with that little opportunity to get that rally on the New Zealand dollar to sell into that meeting on the 10th of September. So just potentially, just putting it out there as a possible opportunity, something to look out for on the New Zealand dollar. If we go to Wednesday, September the 2nd, we can see a lot less data coming out there. This is where the Aussie data starts to kick in. We've got Aussie GDP, as you can see, expected 0.4, which is, of course, much worse than the previous 0.9. This is where the bad data begins for the Aussie dollar. So if we do get a rally, again, you want to be looking to sell into that because this data will probably weigh on the Aussie dollar for the rest of the week. Then we've got construction PMI. Remember we talked about this. This is expected to come out better, 57.6 versus previous 57.1. Again, this is just a theme of the UK data being better. Look for opportunities to buy the pound at some point before Tuesday's data comes out, and there's a very good chance that the pound will rally. And then, of course, we've got ADP non-farm employment change from the US. Again, expected over 200,000. That's positive. As long as that trend continues, we're going to be pretty much looking positive on the US dollar into NFP. ADP doesn't have that much of an impact. People, tend to use it as a kind of a gauge to see what the big figure on Friday is going to do, but I wouldn't get too carried away on that one. It's not really an event I look to trade either in or out. Just another quick note, we've got the crude oil inventories from the US. That's going to be quite interesting considering what happened to oil prices lately, so you want to probably keep an eye on that one. But again, not really tradable. There's a few themes running through the data this week, but anything on the US dollar isn't really one of them until we get to Friday. If we look at Thursday, the 3rd of September, we can see we've got more Aussie data. Again, the theme continues. Retail sales 0.4 versus the previous 0.7. This will probably weigh on it. Trade balance more negative than it was previously. All this stuff, if it comes out in line or even worse, will weigh on the Aussie dollar probably. So we want to be short into that. But again, as I'll reiterate again, it might be worth just waiting for a little rally off Tuesday's data just to kind of give us a better price if possible. There's no rush to get in. Later on, we've got services PMI this time from the UK, 57.6 versus the previous 57.4. Again, better data expected from the UK. Should keep the pound supported, particularly off the back of Carney's comments over the weekend, as we mentioned before. Then we go into some European data. We've got the minimum bid rate from Europe. Absolutely no expectation for a change there. That's probably not going to have an impact on the euro. We do have trade balance from Canada. It's expected slightly worse. Do we want to trade into that? Probably not, depending on what happened with GDP. If GDP came out worse, i.e. 0 or lower, then it might be worth getting into a short on Canadian dollar into trade balance because, we've had one negative surprise going into a negative expectation. So there's no real, there's not going to be much expectation for anyone to be buying Canadian dollars in between those two events. So that could be a good one. We've also got the ECB press conference. It will be interesting to see what Draghi and co have to say about the recent developments with China and how it affects their particular mandates. Of course, they're in the middle of a QE program. And there was a comment last week from Pratt, who is an ECB member. He basically said that it could lead to more QE. So it'll be interesting to see what the ECB say there. Are they going to jump in and do more? Are they going to kind of just say, let's wait and see? If they're unconcerned or if they give the impression that the Chinese situation is kind of irrelevant, we could see euro supported. If they kind of indicate that maybe they've got their finger on the button ready to act, and that it is a concern and it is something they might need to look at, we can expect the euro to drop. So it could, depending on what they say, could actually be pretty market moving for the euro. So you definitely want to keep a close eye on that. Then we've got US trade balance and unemployment claims. Again, not really expecting much from US data there, including ISM non-manufacturing PMI, simply because we've got NFP coming out on the Friday. So not really going to be too market moving there. It's all about NFP. If we go to Friday the 4th, we can see we've got, first of all, Canadian employment change and the unemployment rate. This is expected, I would say overall, slightly worse than previous. The employment change is only 2,000 versus the previous 6.6. Unemployment rate is expected to hold steady at 6.8 from previous. Again, if we get a bad GDP reading, we could be looking to sell into that trade balance data and even into the employment data, I would say. I think we'll probably get a sell-off on Canadian dollar into that. Just based on how those figures are expected to come out later on. And then, of course, we've got the big data from America. We've got NFP expected 220, better than previous. Again, as long as it's over 200,000, that keeps that trend continuing. That'll keep the Fed happy. Average hourly earnings, the second most important reading, holding steady at 0.2. If that's in line or a beat, it'll be dollar positive. Unemployment rate, probably the third most important thing. It's pretty important. Expected to drop to 5.2, which is good for the dollar. Generally, this data is expected to come out pretty positive. So we could see dollar strength into it, but after last week's events with China, expect the markets to be, there'll be an element of nervousness in the market potentially. It's kind of 50-50. The market could be trying to trade into it confidence again. Markets could go risk on. Or they could have a little bit of hesitancy because they just might need that data to come out good just to kind of give that final bit of support to the view that the Fed are going to hike in 2015. Maybe not September, but definitely before December. So it's a 50-50 one, so it's probably not one you can trade into safely. If you want to take a risk on it, I'd probably go half risk on my trade and trade into it. And if it loses, you can go in again and wait for the data to come out and then trade out of it. But that's probably how I'd manage that. So a few good themes go through the week. We've got potentially pound strength. We've got Aussie dollar weakness. We've got potentially New Zealand dollar weakness. But those two currencies, Aussie and New Zealand, want to try and sell into any rallies that we might get. Not massive rallies, but little rallies just to give us a better price because those pairs are at pretty much lows at the moment. Of course, we've got US dollar. It's all about the NFP this week. That's the biggest data point by far. But there's lots of little themes running through the markets. Canadian dollar could be an opportunity if we get a weaker trade balance then going into that, or weaker GDP going into that trade balance. So a few different themes, a few different trade opportunities. Big highlight, of course, is NFP. It's a 50-50. I wouldn't go trading the dollar unless at full risk, unless you're